We often hear that some of the Nordic countries are way ahead of their time when it comes to incorporating ESG factors into their investment philosophy and approach. So to welcome our next panelists and also our moderator, they're going to be shedding some light on the Nordic approach to sustainable investing. Let me now invite Nisid Hajari from Bloomberg Opinion to start with the moderation. Thank you.
Thank you. Thank you, everyone. Thank you, everyone, for staying to the last panel of the day, which I think should be very interesting. I will introduce the panelists as I ask them questions, just in the interest of time. So I'm gonna start at that end and work our way down. Dr. Cheng is the founder and CEO of Avanda Investment Asset Management. He was formerly with GIC in Singapore for 20 years. And in that role, about 20 years ago, the Norwegian Ministry of Finance came to you when they were setting up their sovereign wealth fund. And this fund now is one of the most powerful players in the ESG field, given the scale of its resources, given its long time horizons, and so on. Perhaps you can talk a little bit about how over those 20 years, the fund's approach to ESG investing has changed and where you see it heading in the near future.
Yeah, thank you, Nisid. I think when I started to interact with Norwegians, it came from a totally different approach from the one I was used to. They are very strict about establishing principles in terms of transparency and so on. And I often ask my friends in Norges Bank, why are you so obsessed with these things? And I think slowly over the years, they helped me understand that in that Norwegian culture, that it will be virtually impossible, for the people to agree to entrust such a large sum of money in the hands of a single institution, right? And they have a very strong democratic sort of tradition, and people, I think, also embrace egalitarian principles, values. So I think right from the start, they had already paid attention to what they have come to term responsible investments, even though they were not codified as they currently are now, right? So I think the other, I think difficulty is the source of the wealth. This from petroleum, right? Sometimes I joke with them, it's the original sin for Norway. Now they can't turn off the tap. It is contributing spending from the sovereign funds about 20% of the annual budget, right? You'll be suicidal if they turn that off. But I think there's this great consensus within the country that it should be managed responsibly, not just to the Norwegian citizenry, but to the world at large, right? Now, coming back to your question, I think when they started, it was, they were working with rather blunt instrument. It was what you call the exclusion as a main tool, right? They would look at a company investing, which by now is about 9,000 companies around the world. And they would screen for those that adopt practices that they are deemed to be quote unquote unethical, right? So the early exclusion was Walmart in terms of child labor and other infringements. But over time, I think they have come to see that they kind of relied on exclusion, right? Because if the purpose is to try to influence people to be companies and individuals to conduct the business responsibly, they need positive engagement, right? Now, in order to do so, they have to be very clear as to what they believe in, and more importantly, what do they expect companies that are receiving equities and debt capital from the fund, how they should conduct themselves, right? So if you fast forward to where they are now, and this is very clearly stated on the website, 3 pillars. A, established principles, and that is these principles are used as a means of communicating with the companies what the fund expects, right, when they invest in these companies, right? Number 2 is to exercise ownership rights, right? And so this is really the G part of the ESG, but they think that this is the most powerful thing, because in order to get these companies to behave more responsibly, it has to start at the top. It has to start with the governance. The third part is integrating these considerations into the actual investment strategy. Right? So I think they are now, I think, more balanced in terms of how they try to live these values and how they manage the fund.
Excellent. Okay. Karine, turning to you. Karine Hirn from East Capital. The fund has has many luxuries, one of which is that they can invest in OECD economies and in very strong companies and so on. Your fund started out and still invests heavily in emerging markets and frontier markets, former Soviet republics, now in China. You have a client base, an investor base that is largely Scandinavian, I think, Nordic. So they are putting demands on you to follow these principles. Is that even possible given the places you're investing, and how hard is it?
Yeah, thank you for this question. So first of all, I'm actually delighted to be here. Yeah. I hope you are as well, not only because it's the last panel of the day, but I am actually more used to speaking on corporate governance in Russia or investing in green equities in China. So when I was asked to speak about Nordic Approach, I thought it was very interesting. And first of all, I'm not, you would hear I'm French. It's very difficult to hide my accents. Yeah. But I lived 15 years in Sweden, and I set up a company called ESG Capital in 1997 to focus initially only on Russia and the Baltic states, where we remain one of the largest investors. And now we're covering the rest of emerging and frontier markets. But the fact that we are a Swedish company, it means that we have actually a well-established investor base across the Nordics, which, as you said, is putting some pressure and requirements and help us improve on a number of things. But we're also very engaged in the investment industry in Sweden to promote better standards for sustainable investing. And the third aspect of that, which is, again, why I'm happy to be here, is that probably without realizing it, we do apply a Nordic approach to investment across emerging and frontier markets. And I'll get back to it later today, but I think for me, again, preparing for this interesting session, which I was not initially trained for, I came to the conclusion that I would say that there are 3 main pillars to what we could call a Nordic approach. The first one is about cooperation. The second one is about transparency. And the third one is about engagement. And I'll be happy to give you concrete examples of this later on.
Okay. And in terms of where you do invest now, is it possible to translate these principles there, or is that asking too much? Right?
No, that is exactly what we're doing.
Okay.
Right, I'd be happy to tell you more about it later.
We'll get some more details about how you're doing that in a minute. Sony Kapoor, Managing Director of Redefine, a think tank that is based in London and Berlin and Oslo, I believe. You are working with some Nordic countries now to try and coordinate their approach to sustainable investing, right? Maybe you can tell us a little bit about that initiative and whether, are there really commonalities between these countries? Is there a Nordic approach, or are we just sort of throwing them all together because they're on the same spot in the map?
Right. So it's a little bit yes and no answer. I've lived and worked in Oslo, Stockholm, and Copenhagen, not Helsinki yet, and hopefully never. Mm-hmm. The weather doesn't suit me.
Don't say that.
I have nothing against Helsinki. It's just the weather. But there is definitely a commonality, but there's less commonality than outsiders perceive. There was a time back in the 80s when the Nordic model was actually fairly convergent. But if you look today, for example, immigration policy, Denmark versus Sweden, it's the most liberal and the most tight immigration policy in Europe. And they're both supposedly Nordic. So there is an increasing amount of divergence. That having been said, there are definitely elements that are in common across all of those cultures. And part of it, I think, derives from the simple fact of existence that over the many hundreds of years, when they were all very poor countries and cold, poor countries with sort of extremes of weather, living in isolated communities in Norwegian mountains, for example, in Norway, the only thing that made sense was to be one with the nature. So nature is omnipresent in the Nordics, and as part of that, I think they're more in tune with nature. The second, it really does help, particularly in Norway, Finland, and Sweden, having fantastic resources in terms of hydroelectricity, right? I mean, if all of your electricity generation is from renewable sources, it's easier to be sustainable. And the third is this sort of self-reinforcing trend where the Nordics have ended up in the top 5 or 10 of almost all desirable indices of quality of life, of SDGs, of sustainability, etc. And they feel the pressure and people look up to them, and there's a self-perception within the Nordics that they really are ahead of the curve on everything from gender equality to human rights, etc. Now, the reality is less true. So if you scratch the surface, you start to see the imperfection. You know, for example, Sweden is supposed to be one of the most sustainable countries in the world, but if every country became as sustainable as Sweden, we are all completely screwed. I mean, it's just not good enough. Similarly, you know, Norway is supposed to be gender equal, or at least, you know, but it at best, and I think it applies across the Nordics, they are the very one-eyed in the land of the very blind. But they are still ahead of the curve, but just not good enough.
Okay. Well, let me go back to Karine. Would you agree that there is a common Nordic approach to this sort of investing?
Yeah, there is. And actually, I was thinking about it. So first of all, a disclaimer, Finland is a fantastic place to work or to go on vacation. Okay, my husband is from Finland. I had to say that. And it's, by the way, very, very safe. We just got the award for the safest country to travel to. But no, I think there is. And there was one of the, you were mentioning a number of rankings where the Nordic countries are usually very well placed. There is one that we should add here is, of course, the anti-corruption and transparency. And then here comes my point about transparency. You might be surprised to hear that actually Sweden was in the 18th century probably one of the most corrupt countries in the world. There is historical evidence of that. For instance, a French ambassador sending a desperate letter to Paris to ask for more funding because he couldn't get anything done without paying bribes everywhere. And you know, this is amazing. We have to understand that, to realize what happened then. Well, there was an enlightened king who realized that if they would not solve this problem, probably his kingdom will collapse. It does remind me of somebody else thinking this way in terms of anti-corruption right now, but let's not mention the gentleman, but clearly it's a problem. So in 1776, they enacted a very important act, for which actually no real translation is called offentlighetsprincipen in Swedish, which means basically the right to information. For any official document sent to any authorities, you have the right to request and to know what there is inside this information. And this has meant a huge change and shift in the way, of course, people will not be able anymore to ask for bribes or pay bribes. And this transparency is clearly, I mean, the same principle is, for instance, actually part of the constitution in Finland and across the Nordics, something very important. On this topic of transparency, in case somebody was wondering why I brought this newspaper here, it's not that I thought it was that boring I might have to read my newspaper, but this is Dagens Industri. This is the largest and the most important daily business newspaper from Sweden. This is from 14th of October 2019, and it's a very special edition. Do you know why? Because this is the first newspaper in the world to disclose and report on scope 1, 2, 3 data of the largest companies on the stock exchange. They said that basically in this paper they've been reporting on all kind of financial indicators and ratios for 40 years, and they realized that, well, we need also to disclose information about the environment. And why is that important? Well, you look at it, today there's only 40% of the largest Swedish companies which are disclosing this Scope 1, 2, 3 emission, actually Scope 1 and 2. And so clearly when you look at this paper, if anybody's interested, I can show you my copy, but I won't give it to you. Basically, you will see that, of course, it's a lot of blanks in these reports. People will be paying more attention to this. And again, I think it's actually quite interesting and a quite innovative way of working with transparency to promote better ESG standards.
Right. And how do you, so just to come back to our earlier question, how do you translate that desire for transparency into a place like Kazakhstan, or I mean, not to name names, but just China, even countries where you're putting your money? Do you think that is going to be able to affect change within these countries?
Well, absolutely. I mean, we ask questions and we push for better disclosure. At the same time, I think everyone in the ESG world now understand that issuers there's a bit so-called disclosure fatigue. Yeah? It's a lot of work for them to report, and it's usually only the larger companies able to do that. So we're doing the work ourselves. So we have our own ESG scorecard since 2016, where we go through the list of things, and what is very important for us, because it's still a big issue, I think, in this world of ESG investment, is that a lot of the scoring, if you buy scores, they are basically based on the availability or not of policies, not the actual facts. So, and we know that for a fact. I remember meeting with a company from Estonia, which, according to some ratings, was scoring well because they had a gender diversity policy. But they had a policy, but they had no women in the board or in the top management. I also remember a very interesting steel maker from Russia, which told us very happily that they had improved their score because they got a child labor policy. If you know Russia and if you know the steelmaking industry, you understand this is complete it's crazy, because you will never have even thinking about having a child working in a steelmaker, but they did it and they improved their score. So for us, the approach related to transparency and information, it's a lot of basically hard work and getting to the facts and not only staying at the policy level.
Right. Okay. Dr. Sung, another thing Karine mentioned was cooperation. Are there ways in which these countries and their respective funds can work together to maximize their impact globally as ESG investors?
Yeah, I think that this is well understood by most of the large asset owners around the world. So there are various initiatives that have been put in place. One very ambitious one is called the Future Long-Term Investment. It's got a very long name, but you see the major players are the Canada Pension Plan Investment Board, OTPP, GIC. I'm not sure if Norway joined that one, but I think they are using the collective muscle to try to induce change in how corporations or even governments conduct their business. Right. So I think there's positive signs to be hopeful.
Right. Okay. And Sony, we were talking earlier about how the Nordic countries alone, really, they punch above their weight when it comes to this, right? They account for something like almost 7% of green bond issuance globally, despite their size. Are there other ways in which you think they can sort of drive the momentum behind ESG globally, even though they're relatively small players?
So, I mean, it's partly the reputation, because people look up to the Nordics, and one way of thinking about them is they're the pilot projects of the world, right? So if you think of the following sentence, if even, fill in the blank, Sweden, Norway, or Denmark can't do this, and this can be a number of policies, what hope is there for Germany or Greece or Argentina? And with that kind of power, soft power in particular, I think comes, misquoting Spider-Man, comes a lot of responsibility. And if the pilot project doesn't work, then what hope is there for the lesser mortals? And they understand that, but there is a lot of catching up to do. So one of the things we are trying to do is to set up a pan-Nordic new initiative called NIFTIS, the Nordic Institute for Finance, Technology and Sustainability, to build a lot of capacity, because the fact remains, even though on a per capita basis, they are one of the largest exporters of capital into the world, between the Norwegian oil fund, the Swedish, the Danish, and the Finnish pension funds, They have a huge export of capital for a region of only 25 to 30 million people. But there isn't enough thinking and intellectual capacity. They mean well, and they have this culture of sustainability, and they're further advanced in ESG, but they really can think of punching above their weight systematically. Another thing that really helps is that they are taken together, one of the largest donors of overseas development aid in the world. So they have a disproportionately large influence in the likes of the World Bank and the IMF, etc., and in developing countries in the development debate. And you put the two together, and the potential to do good is amazing. It hasn't been entirely exploited systematically. There are examples. So the Swedish AP4 fund in 2012, before it was fashionable, started decarbonizing its portfolio. The Norwegian oil fund put expectation documents on tax havens, on climate change, etc., so investors know what they as investors expect. The Swedish AP7 fund became the first fund to divest on the basis of a company not meeting the Paris Accord criteria in 2016. It sold out its shares of Exxon and Gazprom because it didn't meet the Paris Accord. And SEB, the large Swedish bank, was actually the first bank to issue green bonds together with the World Bank, which is one of the reasons that is so important. Green bonds are so important in the region. So there is a lot of promise, there's a lot of good intentions, but not enough systematic thinking of how to really, really influence the world. But there's a huge amount of potential upside if they got their act together.
What's missing? Is it expertise? Is it experience?
Expertise is one thing that's definitely missing. The second thing, and it pains me to say this, is something that all of us suffer from, which is, if everybody pats you on the back all the time and tells you how terrific and great you are, no matter how modest you are, it goes to your head. And that has happened in the Nordics. Everybody's always congratulating them from the outside, to the point they really think they are much, much better on a number of these aspects, as I mentioned, including on corruption, than they really are. So yes, there is no bribe paying in the Nordics, right? Money is not exchanging hands, but corruption takes a different form, and it's called nepotism. Who you know in countries, small countries like Norway, for example, remains far more important than what you know. So the self-perception is that they're really meritocratic countries. The reality is a bit more fuzzy, but they're still better than almost everybody else.
An important caveat there.
I would love to disagree, but clearly we won't have enough time to engage in a debate. But I wanted to get back to this issue about cooperation, because I think it's really very specific in this Nordic approach, and a couple of examples. The Swedish larger pension funds, called the AP funds, have since 2007 set together something called the Ethical Council, where they're basically sharing resources to engage with companies abroad, especially in emerging markets. Quite a remarkable example of very concrete cooperation, where we could think that, why wouldn't you have the same in many countries? Because they are pension funds, they should have the same kind of goals. So they're sharing. This is very interesting. A more specific example of actually how it works in Sweden, for Swedish companies, Swedish listed companies, also interesting. You have something called a nomination committee. Same as in the UK, except that in the UK, usually it's internal members of the board, whereas here it's actually representative of the shareholders. So there is a nomination committee which is being elected by the AGM, and it's this nomination committee suggesting some directors to the board. Also an interesting example of collaboration that has made the example seen as, when we are fearing the risk of having too many ownerless companies in this world of increasingly institutional ownership that we have. This is a way of making it more, less ownerless, which I think is interesting. And then the last example I wanted to share with you is a collaboration where we are very engaged ourselves, called Swedish Investors for Sustainable Development, which basically has recently been quite talked about, because it has inspired the Global Investors for Sustainable Development, which is backed by the UN and was launched in New York just a couple of weeks ago.
What's the reception when you're investing in companies, and let's say you're trying to improve their governance standards, again, in these emerging markets, and you're coming from this Nordic perspective? How do they take that?
They are very interested. I think the fact, again, of coming from Sweden is actually very positive because we are less, I would say, confrontational in our style. So we don't invest in companies just thinking we're going to invest and then we're going to sue them and then we're going to extract value this way. So it's a lot about engagement and dialogue. Sweden actually, also an interesting fact is actually norm-based screening, which is a big part of the ESG investment. Basically got its roots from Sweden. So it's a lot of engagement based on this norm-based screening and the UN Global Compact and the likes of it. But what we're saying to them is you've got to be, again, very concrete in the way what you want them to improve on. We have our own scores. We explain to them how they are rating compared to competitors. In general, very, very positive and very interactive kind of process, actually.
Right. And they welcome the help. Okay. Dr. Cheng, without getting into, obviously, private discussions with the fund, I'm curious about what emphasis in their strategy means they put on these principles. Is this a major focus? Is it an afterthought? Is it something that comes up for 10 minutes in a 2-hour discussion? Or
no, I think this is becoming an integral part of how they invest. Right? But I think there's one aspect of how these large public funds, whether they are public pension or sovereign or even central banks, how they invest. There is a very strong institutional angle which I didn't hear too much of today, right? Because the primary accountability is to the stakeholders, right? So take the Norwegian fund, for example. They're trying to manage wealth for future generations, for current and future generations. And of course, they also have this mandate to conduct themselves responsibly and sustainably and ethically, right? So it is a difficult balancing act they have to go through, and that I have been a witness to, right? Now, but there's a silver lining. Maybe I tend to see good in things rather than where they fall short. For example, the recent decision by Norwegian to allocate up to 2% of the fund to renewable infrastructure. I know this is something very close to your heart, Sony. You've been championing that cause, right?
10 years.
Only for 10 years, But your voice is certainly well heard. You may not have been well liked by all, but certainly, your views did influence people, right? And so they finally decided that they're going to allocate 2%, and it's mostly going to solar and wind power to start with. But that's out of $1.1 trillion, so it's not a small sum of money, and that's just a start, right? So I remain hopeful.
Interesting. So they are open to outside perspectives. On that point, we've been talking a lot about what the world can learn from these countries. Is there anything that they can learn from countries in Asia, from other parts of the world that they...
Yeah, I think one of the problems is that they are really small countries, right? I mean, they are not at the cutting edge of sort of thought leadership on most issues. And the fact of the matter is, one city alone, Bangkok alone is bigger than, 2 of the Nordic countries taken together, just in terms of population. And this is a European problem, but also a Nordic problem, which is that we don't really have the humility to sort of think that we have things that we could be learning from Kenya, for example, or India or China. But Klarna, which is the biggest Swedish startup, well, it's not a startup anymore, it's a few billion-dollar firm, fintech firm, a unicorn, it wouldn't have existed had it not been for M-Pesa in Kenya. Right? The Chinese Green Financial System Initiative, the policy discussions and decisions there are so much further advanced than what the Swedish Finance Ministry is looking at in terms of regulations for AP. There is another truth, which is that the reality at the boundary of the most emerging, interesting economies is shades of gray. And if you have a very black and white approach, for example, to transparency, as the Norwegian Oil Fund does, then it severely limits what you're able to do. So for example, the Norwegian Oil Fund, the Finance Ministry, forbids investment in private equity. It forbids investment in infrastructure. And the primary reason is they're fearful of any discretionary decision where something will go wrong, which it inevitably will, and it'll end up in the headlines, and they think it will take away the legitimacy. So as a result of that, they are mostly absent from the most dynamic, fastest growing economies in the world. And the fact of the matter is the future of whether climate change is addressed or not, whether the sustainable development goals are met or not, where future growth is going to come from, it's all going to come from countries such as Thailand, India, Kenya, Malaysia, Indonesia, where the challenges are very, very real. These are shades of grey. Corruption is a problem, and the listed space is tiny. And if you restrict yourself, you won't learn. So I think learning the best lessons and openness would be beneficial for them in a financial, economic sense, and be beneficial for the world.
Karine, I'm going to give you the last word. You are operating these markets. If you were giving them advice, would you tell them you can do this? You can get involved here.
Yes, absolutely. But I mean, you are of course completely right. I mean, just some statistics. I mean, during the summer we had the huge Siberian fires, and in terms of CO2 emission, it was just in 1 month the equivalent of Sweden annual CO2 emissions. So clearly, but I think personally, I believe that people in the Nordics are very well aware of that, and that's why they are still quite engaged and working on these issues. And that's why, for instance, we started our company out of Sweden, not for a coincidence. It was because there was a real appetite for investment into emerging markets. But we shouldn't end the discussion here on a negative note. But just today we started the discussion this morning, wondering and polling the audience on whether Greta Thunberg should or not get the Nobel Prize, which is interesting. She's Swedish and the Norwegian, Nobel Prize is from Norway, and she didn't get it this year. But one prize she got yesterday was the environmental prize from the Nordic Council, but she just announced that she's refusing it. And she's refusing it because she thinks that the Nordic countries are clearly doing quite a lot, but far from enough. And a country like Sweden is still living as if it had 4 planets, on a yearly basis. So I think it's very good to know that you have some young Swedish people who are clearly not compromising and not being complacent on the challenges ahead.
Holding their own countries to account. All right, excellent. Well, on that note, we will end this session and the conference. Thank you very much for being here, and thank you to our panelists for being here as well.
Thank you very much. Ladies and gentlemen, it's with great gratitude that you've allowed me to be your host today. This is the end of the GPF Bloomberg Sustainable Investing Conference. And those of you who are still in the room are clearly the ESG enthusiasts that lasted and powered on with that caffeine hit. It's a shame we lost a couple of our fellow ESG enthusiasts. So I really hope, going back to what Nitin was saying earlier on, that we're all able to take home some snippets, some ideas of how we can better engage, whether you're a corporate, whether you're an asset manager, whether you're an asset owner. There's a role for all of us to play. There's a role that we would like to play as Bloomberg, and I hope that is evident today. I would like to pay a special thanks to all of our panelists. 42 of them, as I mentioned earlier on, from over 11 countries. And of course to all of you who have traveled from far and wide. Again, I really hope that this is something that we can build on year and year, and take this to a different level. And again, going back to what I mentioned in my panel earlier on this morning is maybe we'll have different job titles in 10, 15, 20 years. Thank you all, and I wish you all a wonderful evening.